Hey guys, this is Tevin again from Simple Forex Options. Coming to you guys today with another video. Actually, wait a minute. Phone was ringing. Sorry about that. Yeah, but actually, this video is really not anything new. It's more. I'm gonna more so be expounding on my Parabolic SAR strategy, and I actually, it's crazy. I made these modifications to it a really long time ago. It wasn't like I just recently did this. I did this such a long time ago, and I never got around to actually updating people on the video and the changes that I had made. So that's kind of why I'm making this today, to kind of show you guys what I did to it and how it looks different, and what kind of decisions that I've made that you guys will probably be able to glean from. Now, as you guys can see, I have two charts up here. You have the Euro USD 5 minutes and also the Euro USD hourly. Now, I use both of these occasionally, but not as much, because I have, strategies and stuff that I use on my MT4 charts, but they're more so helpers or aids to kind of give me a good broad view of the market and where things are going and whatever it may be. Now, when you look up here, you'll notice that you see a whole bunch of these spikes and strikes and all that kind of stuff like that. This, I promise you, this normally does not look like this at all. It probably really only looks like this because it was a U.S. Holiday today, which is President's Day, and a lot of the markets was probably closed down, volatile, slow, whatever it may be. Things probably just wasn't reacting normally. But if you were to probably go back here, if you scroll back a little bit, you'll see it's probably a little bit smoother and stuff like that. But it's a whole bunch of choppiness, and it really just has something to do with the U.S. session actually being closed. Once it opens up back up again, the markets will probably go back to normal. They'll start trending, and they'll also start moving strongly in different directions and all that kind of stuff like that. Now, a couple things I want to mention. You guys will notice there I have the normal Parabolic SAR, and I will also say, if you have not, please watch the first video first of the Parabolic SAR. It's very popular. I think it has like 50,000 views. I would say watch that first and use that as a reference point in order to refer to this video, because I'm not going to go in detail over some of the stuff that I talked about in that video. But one thing I kind of wanted to mention, you're going to be using the same strategy. You look at when a new trend starts, which is when the first dot pops up, and then you look at the price on those dots and all that kind of stuff like that. The things that I added in, first thing I added in was this line that you see going across, which is a 50 simple moving average. All you have to do is, you see, and I'm gonna let you guys see the settings for it. That's how I have it, 50 simple moving average. I have the line style dotted, so it kind of stands out for me, and I made the line pretty thick so that I can see it clearly, because as you guys can see, I have other moving averages up here as well. I also have a 14 moving average, and also, if you guys were to look at this, it kind of acts like a support and a resistance almost. So like if I were to take this back, you see this little red line. When the market is kind of like hovering or showing over this red line, it's usually giving you an indicative, or giving you an idea that the market is probably at a standstill. It's not really doing much. So if you see from here, from 11 a.m. to 12 p.m., you'll see that the market has no trend direction. It's kind of slightly going down, but even if you look at the 50 simple moving average, it's not really doing too much. It's moving very slowly. But when you start to see there's a little gap of space right there between this 14 moving average and then also the price in itself, you will begin to notice that the price treats that sort of like a support and sort of like a resistance. So these markets are not trendy today, so you're not going to get it like a good look. But if you look over here, you also see how it gaps out. It treats it like a support and resistance as well. And let me see if I can go down a little bit. You see it right here. Same thing over here. It crosses over, gets you a little gap right there. Treats it sort of like a support and resistance. Another moving average that I have up here that I added was the EMA 6. And this is not really for like a support and resistance kind of treatment, because as you guys notice, when you look at these Heikin-Ashi candles, this is what these are, Heikin-Ashi candles. You will notice that they're not like indicative of actual market movements. They're really based off of highs and lows. So I actually personally I have my Heiken Ashi candle set up in a certain way, and I'll probably show it to you guys so that you guys can see. I have it on open versus close, and then I have it also on open versus close, and I just choose to do it that way. Now, most people actually, when you first started off, I think it starts off on net change, but I found open versus close to be a lot more accurate to me because net change, it's too colorful. Like it shows too much greens and reds. So look right here, and it may change. I'm not sure because I haven't tested it. But if you put it on net change, you'll see the difference. How that little green came up, and it gets a little bit more indicative of the actual price movement. But you want like an overall view of the market. You don't really care about the little small spikes and stuff that happens. You just want to know where the market is going as far as the trend direction. So that's why we do open versus close, to give us a more cleaner look. Now, that's the EMA 6. I forgot to mention this, but the exponential moving average sits, and this 14 is the exponential moving average as well. But the EMA 6, I really just use this for crossing over. So when I see that the EMA 6 crosses over the price, and I mean the price crosses over the EMA 6, usually it's a sign to me that a new parabolic SAR either is about to come in or that the trend direction is about to change. So right here, if you were to look over here, you'll see this purple EMA 6 right here, right? And this blue line, if you guys notice, this is, I have it set, and I'm gonna show you guys the settings. I have it set as a line. Plot color, I just put it light blue, and I put the period 1, and I put also high plus low plus close, and I feel like that's most like accurate to like the I feel like that's but like I said, I'm sorry, I feel like it's most accurate to the overall price. So that's kind of why you want to put high plus close, and you want to put period 1. And the reason why I like, also, I'm sorry, I felt that it's more accurate to the actual price, but also too, because in Heiken Ashi candles, you don't have actual candlestick bars, so you don't really see what the market actually looks like. You only see what it looks like in Heiken Ashi. Like if I were to change it to candlestick bars, you will notice that the markets will look totally different. So that's why I have the average HLC moving average, and I have it light blue because this is more accurate to where the actual price is at that time than the EMA 6. So if you were to look right here, you see what this little blue line is. That's usually a good accurate or a good Taylor sign of where the price is actually at for this pair. So also, this is the other thing I added to as well. Keltner chains. Well, yeah, that's what they're called, like Keltner chains, Keltner channels, bands, whatever it may be. Now, some people use these as kind of supporting resistances, and you actually can do that. I would recommend that as well. It's not a bad idea. But the way that I kind of find myself kind of dabbing into and using them is simply as kind of getting a gauge of when the market may come up with new parabolic SARs, but also getting a gauge of when the market has a strong trend. And I'll show you how I view that. Like, for example, if you see that it kind of leaks out of the Keltner bands right here, you'll notice that a trend change might be coming soon, and bam, you'll see these bars right here pop up. That's kind of, it's sort of similar to a Bollinger Bands. It's really not that much difference. So you'll see that it kind of leaks out, then bam, then it starts going down for about 2-3 more hours. Same thing over here. You see it leak out on this side, and eventually it starts going up. A parabolic SAR pops up like a couple candles later, like probably about 20-25 minutes later. After it leaks out, then it retraces back, and bam, you have another trend right here that starts. And we could go down here as well. You see it leaks out right here, and bam, another trend starts right there as well. So the reason why I said that this is indicative, because it could show you, give you a good gauge of market reversals. And I'll show you guys the settings that's up. These are the settings right here, so you can pause and look at those, set them up however you want. But also the reason why I really like them is because it gives you an indication of when the market is truly trending. Now, of course, today you won't really see it, but look down here. If you'll notice, you'll see that this EMA one, I mean, not this EMA one, this HLC one, whatever, this moving average, it crosses outside of the Keltner bands. That's a totally different look than the actual price spiking out of the Keltner bands. This actual moving average crosses outside of the Keltner bands. So, and if you were to look over here, you also see it probably happens a couple times. This crosses out right here too, but it reverses. But what I actually mean by that, you see, when you see it cross out, I would say look at it and kind of watch it, because it could be a sign of a continuation of a strong downtrend. So I wouldn't suggest making signals off of this. These are just more so to give you gauges of what kind of direction that the market will be going in. Also, I didn't mention too as well, down here as well, what I have is the stochastics. And of course, as you know, stochastics, you have your regulars, your overbought and your oversold levels. And then you also have the signal line versus the stochastic moving line. So a lot of times if it goes over this certain level, you want to be looking for the price or this yellow line to cross back over of this blue line in order for, actually, I believe the blue line is the signal line on the stochastics, because I have a stochastics on MT4. So this one looks a little bit different to me because I haven't used free stock charts in so long. But it may actually, the yellow line may be the signal line. So if the yellow line crosses down towards the blue line and they both go out of the overbought area, then it could be a sign that the market will continue to go down. And if the vice versa in the other way, if you do it on this side, it could be a sign that the market will continue to go, or to start or begin to go up. Now, the best way to use stochastics, I know most people use them just plain, and you should not do that because they give you reliability as far as like the timing of the reversal, but they don't give you the reliability as in the direction of the trend. So as you guys can see, this is very flat down here, the stochastics line. And it's very choppy right now because we're not in the proper, because the U.S. session was closed today. So it's not going to see a bunch of trendy stuff. But one thing you will notice is that the stochastics usually gives you a timeful reliability of when the market will reverse. Like, for example, if you see right here, I'm sorry about that, but yeah, if you were to see right here, you see, bam, you see how it crosses below, and eventually the market does go into like a small reversal. But the bad thing about doing that, and this is why you must use this with discretion, is that you never want to trade the stochastics against the trend. So if you look right here, you'll see that the price crosses above the 50 simple moving average, which is this yellow line right here. And the 50 simple moving average is going in the up direction. If you look from this side to the screen to this side of the screen, you see that the price is currently going up. And then you'll also see that as all of these moving averages crosses over, bam, these crossover, that crossover, the price crosses over, you will notice that the stochastics is all the way up here, although the market is going in an uptrend. So what I would say is, if you see it crossing over the overbought level and the market is going in an uptrend, let it retrace back down. So let it come back down here. You see where these little red candles and stuff at, and it'll bounce off. More than likely, it'll bounce off of this 50 simple moving average, unless you're dealing with some real volatile markets that are going back and forth. This 50 simple moving average can be used as a support and also a resistance in the direction of the trend that is going in. So if the trend is currently in an uptrend and you see the 50 simple moving average actually pointing up, you can use it as a support. And as you guys can see, bam, the price comes down, bounces off of here, and then it goes back in this direction, going that way. So this could actually be ideal for people who trade Forex or trade Nadex and use Nadex spreads and stuff like that. You guys would probably be able to use that really well. And also for people who trade Nadex who wants to do ITM binaries, which means that you want to buy a binary that's already in the money. If I was you, what I would actually do is trade in the direction of this. Once it bounces off, you choose something that's probably below the 50 simple moving average, or you choose something that's around the area of the Parabolic SAR in order to get your strike at. That way, you know, the price may not go there. So these are just kind of ideas and stuff that I'm tossing on, that I kind of added in on my parabolic SAR strategy that I didn't really talk about. But I have been using this stuff for actually for a long while now. I just never really exposed it or talked about it because I guess I never thought to find the time to. But there's been tons of people messaging me asking me have I ever updated the strategy and all that kind of stuff like that. And for those who have been asking, these are all of the updates that I have made. So let me get a quick brief overview. You have your parabolic SAR. You remember that from the last video. Your Heikin-Ashi candles. You also have your 50 simple moving average. You have your exponential moving average for 14. The 50 simple moving average is supposed to be the direction that you place your trades in. So for example, if you see that this is below the 50 simple moving average, but you see an uptrend start with the parabolic SAR, I would say don't take that trade. Though sometimes it may win, you still don't want to take that trade because it's going against the trend. Just let it go up here. Once it bounces off of the 50 simple moving average, let the new parabolic SAR dots open up, which is the ones that it's telling you is going in a downtrend, and it's already below the line. And if you look, it'll most likely come in the money. If you look, it'll most likely come within the money in due time. So yeah, so the 50 simple moving average trading direction of that, if it's also too, if it's above, you want to look for calls, and if it's below, you want to look for puts. Now also with the 14 moving average, this is more so seen as a support and resistance. It's a very small support and resistance, but as you guys see on strong downtrends and strong uptrends, the price usually doesn't touch that area. So if you look up here, you see that the parabolic SAR comes in back here, and it comes in back here, and you'll notice it's very noisy. But then when you see a bunch of gap and a bunch of air between this 14 moving average, is usually indicative that a strong uptrend is going on, or even is going to start, and you should be able to get some kind of profit or get some money out of that, and that should be able to work out fine for you. And even better on this one, it crosses below the 50 simple moving average, which is a strong indication of a trend change. That's probably one of the strongest indications of a trend change that you can get in this strategy, is when the price crosses below the 50 simple moving average. And for it to make it easier for you, I would look at this light blue HLC moving average line, because that's most indicative of the price. Once you see that crosses over, you could probably take a trade for a put, and if you were to place it, if it were to expire down here like an hour later, hour and a half later, you'll be deep in the money, have your profit, all that kind of stuff like that. So yeah, that's for the 14. For the 6, just like I mentioned before, use this as a crossover. So when you see that this crosses over, is usually indicative that the Heikin-Ashi and actually also the parabolic SAR is usually indicative that these things are about to come up and show a slight trend change. And I just mentioned to you about the HLC1 Keltner bands. I talked to you guys about that. It's also used sort of like a support and resistance, somewhat like a support and resistance. It's a resistance on a downtrend, but it's a support on the uptrend. But it could be used as both. But you just want to be wise in how you use them. Just refer back in the video about the points that I mentioned on that and how you use those. And also too as well, when you see these things break out like this, like a strong breakout, and you see it's kind of like going down and stuff like that, that's usually indicative of a strong downtrend. It's hard to see it in these markets because they're going like very sideways. And also same thing I mentioned about the stochastics, you don't always enter when it goes above or the green line, or go above, or go below the red line. You only want to enter when it's in the direction of the trend. So for example, if this was if this is below this yellow line and you see this go above overbought, and you see that the trend is currently in the strong downtrend, you more than likely want to be looking for a put opportunity. So that's the only time you really want to be looking for a put opportunity. But if we were to change, and I want to see if I could probably find an example. Yeah, for example, look at over here. This crosses below. It's now in the downtrend from this point on. But you also see that the stochastics line It's all the way down here and it's below the oversold line. Well, yeah, it's below the oversold line, but it's down here for a while because the price to trend has changed. So it has to readjust itself. So those are the kind of mistakes that you just don't want to make. You want to kind of like avoid those mistakes and only trading in the direction of the trend. So yeah, I think that's all I have so far. Let me see this up here as well. This is very simple. This is really not anything important. And these are very choppy markets. Yeah, I use a lot of 1, 2, 3 movements up here, but yeah, you can't really use that. But yeah, I think that's all I have for you guys. That's the updates that I made to the Parabolic SAR strategy. Definitely check it out. Like, share, subscribe. And I didn't give details on entries and all that kind of stuff because I explained all of that in the other video. This video is just to kind of give an update on the updates that I had personally made to the strategy itself. And I feel like it's a lot more useful this way. Actually, you'll be able to kind of take out some of the noisy stuff that happened, and you'll be able to like have a lot more cleaner, legitimate signals. So for those who would like to use it, definitely be useful to you, and that especially for those who are Nadex users, this could be very, very useful to you, mainly because you'll see that the entry rates in the last video, they're around, like I usually put them on certain strike rates that happen around here or happen around there. The good thing about Nadex is you can enter somewhere where the market has left or has not even reached yet. So for those who kind of want to use this strategy for the for Nadex, it'll definitely be useful for you. So hope you guys enjoy. Have a good day. Thank you. Also, if you want instructions on how to join my signals group for Nadex signals, just check the description below, and I should have a link to my Facebook page. Just add me as a friend, message me, and I can give you instructions on how to join. It's only $20 a month. Hope you guys enjoy. Tevin from Simple Forex Options.